at the end of the day, if companies' numbers are not aligned with the Paris Climate Accord, the behavior will not be aligned with the Paris Climate Accord.
Oil majors need to better reflect climate risks in their accounting. That's what investors managing $2.2 trillion in assets are pushing for. The campaign is being led by asset manager Saracen and Partners. Reuters spoke to their head of stewardship, Natasha Landell-Mills.
If you're using excessively optimistic assumptions in those accounts, such as overly optimistic oil or gas price assumptions going out in the future that don't take account of decarbonisation, then your accounts will tend to overstate the capital you have available to deploy and also your performance. So it's really, really critical that those numbers are accurate, because at the end of the day, they are what drive CapEx decisions and strategy.
And investors believe it's working. British oil major BP announced it was reducing the value of its assets by up to $17.5 billion because it doesn't think oil prices will hold up as well as it had previously hoped. Although the investors can't be certain how much direct influence their campaign had on BP, they say the move was hugely important.
Then, of course, we had the announcement that they were coming down to 55. So there's still a question there. Why 55? Why not 50? But I think the fact that they have come down to 55, which is a significant drop, and you've seen the materiality of that come through, was really vindication of the case that we have been making over the last 2 to 3 years, that this really, really matters.
BP declined to comment. Landell-Mills said the group have already begun lobbying other companies, including building materials company CRH and the Anglo-Australian miner Rio Tinto, which supplies the steel industry. Along with cement, steel is a major source of greenhouse gases.
But I think the really key takeaway from all this is what happens to other oil and gas companies' financial statements if they were to come down to the levels that BP has come down. And it's not just the oil price, I should stress. There's been a lot of focus on the oil price. In fact, they lowered their gas price assumption from $4 per MMBTU to $2.90. That was actually a bigger drop. That was almost a 30% drop, whereas the oil price reduction was closer to 20%. So, we really need to not forget that impairments can come from the gas business as well.
Early last year, the investors called on the Big Four accounting firms to do more to ensure climate-related risks are adequately reflected in company financial statements they audit. The concern is that many businesses are both contributing to the planet's warming while also failing to take full stock of the risks they face, which could pose a wider risk to global financial stability. Landell-Mills sees much more work to be done.
A really big question for shareholders are we paying bonuses based on numbers which are not Paris aligned? And I think if that is true, then we've got a big problem, because then we're rewarding bad behavior.